Hey everyone, before we get started, just want to give you a quick heads up that this Tuesday I will be doing a webinar on trading strategy, specifically the short vertical in real time. It'll be a live webinar with a live trading platform while the market is open. Here's the specifics on the webinar itself. I'm going to attach this in the resource section so you can use this link. Hope to see you there this Tuesday at 11 a.m. That's Pacific time. That's America and Canada time, 11 a.m. Hopefully, I will see you there. Now let's get back to the market and what happened last week and look to make a trade. So this is the S&P 500. This week the indices kind of did their own thing. So we'll go through them and I'll show you. So you can see the S&P 500 kind of went nowhere, right? It kind of went up and down, but essentially kind of stayed in this range, pretty much going nowhere, and volatility is obviously pretty low way down here at 10. But if we look at the NASDAQ kind of went shooting to the moon over the last week in the same kind of amount of time. And because of that, volatility is extremely low. But the Russell looks totally different. Look at the Russell here. The Russell has been on this kind of downturn for the last couple of weeks now. So it looks totally different than the other two. And volatility is, not great, but obviously higher than the other two. We always like to have trades on in indices. Being a contrarian and on this huge down move, this seems like a good time for me to get into the market as far as what I would look to trade in the IWM. So that's what we're going to do. We're going to go to the trade page. In this case, we're going to the 47 days, which will be 46 tomorrow. I've already saved us the trouble of setting this thing up. The strike prices are a little bit awkward as they're not all dollar wide. Some are 5, some are $1, some are 250. So I tried to find the happy medium. So here's what we're doing. At 233, we're selling the 222 and a half, which is about $11 below. Now, because it's on this downturn, me being a contrarian, I am skewing this thing to the upside, meaning I'm going to put the put side closer than the call side because I believe it'll continue to go down maybe for a while, but over the course of this 46 days, there will be more room for it to bounce back up. So you can see on the upside, I went an extra $10 away. So it's almost $20 away on the upside, about $10 away on the put side. And then again, these were 250 strikes. So what I did was make it a $250 wide iron condor, which means I need to collect at least 82 cents or more for this trade. And why is that? And that's because I'm always looking for 33 cents per dollar width. This is 250 wide, which means I'm looking for about 82 cents or $82 or more credit to make this trade. So assume everything stays here tomorrow in the IWM, the Russell. We're doing this iron condor skewed to the upside, as they call it, where the put side is closer than the call side. We're doing it 250 wide, and we need to collect at least 82 cents or more for this to be a valid trade. And that is our trade in IWM for tomorrow. Also, hope to see you at the webinar on Tuesday.